Everybody, it's Wednesday, the 7th of November, 2018, and the market had a big gain here today. We still have that pattern of lower highs and lower lows. It's likely we'll get back above this little peak here, but would you really want to buy it above that level after the energy that it's expended here and with the declining 50-day moving average? So it can be frustrating when we see moves like this occur if you're not already long, but we knew at least not to sell short with that rising 5-day moving average and the market above the volume weighted average price from the recent low. So you can, as they say, it's easier to be on the sidelines in cash wishing you were in than it is to be in the market and wishing that you were out of it. And I think that's, a little bit of perspective here that you have to hang on to. The volume weighted average price from the October high had been obliterated off the open, and we also got above and held above the volume weighted average price from the high. That also, of course, puts us above the declining 200-day moving average. And now we continue to see mixed messages. Let's break down today's action. As I mentioned in the midday video, it looked initially like that gap might fail, but then as it got back above the volume weighted average price from the gap and from the morning peak, from there it took off and just never looked back. And a lot of times that's what happens when the markets gap, which is why I wrote that article 10 years ago, Chase the Gap or Wait for VWAP. This was a classic case of that. If you had purchased in here, I'm not saying I suggested it, but your stop would have gone underneath the low of the day. If you're going to be a day trader, focus on day trading, and that's certainly a good skill to have. This is a swing trade service. We have one good swing trade open, fortunately, but you can still, have that FOMO feeling, fear that you did miss out, photo, I guess, fear you did, whatever, fear that you did miss out. But the point is, there will be more market activity and volatility here. The Nasdaq got up to its volume-weighted average price from this peak here, and we still have a declining 50-day moving average. But again, it doesn't mean we short. We have a rising 5-day moving average. We saw the market break its range, this recent range, and just continue to move higher. So now we'll be looking at pullbacks as measured opportunities for shorter term trades. But as far as the indexes go, they have been confusing, which is why the focus should be individual stocks right now. And the Russell 2000 continued to follow through as well. It got back above its volume weighted average price and blasted higher for the rest of the day here. So you have to focus on what the market is doing, not what you want it to do. I wanted it to pull back here. The market doesn't care what I want. I also said that it's possible, it's not a market call, but it's possible we could continue up into this level here. We still have a declining 50 and 200-day moving average, but a rising 5-day moving average. We've had a conflict of trends, and you have to decide which one you want to focus on. The semiconductors did move higher here today, but interestingly, they didn't break the high of a couple days ago. On this intraday time frame, we can see that we can draw a trend line that looks like this, and it's very easy to spot a shoulder, a head, and a shoulder here, and perhaps that means it will continue to move higher. But again, still difficult to trust with the declining 50-day moving average. Maybe it continues up towards that level, and that would be a good trade. The question is, where does the low risk, high volatility, high probability entry come? Is it above this peak, or is it first a pullback, then move above that peak would be preferred? The biotechs were up $2.60 today, so they were, continue to move higher above that rising 5-day moving average as well. The daily time frame, we're right up against the year-to-date volume-weighted average price, a potential level of resistance, and the 200-day moving average. But this is why I call them potential levels of resistance. Other people will say, hey, the biotechs are at resistance. We don't know what's resistance until after the fact. Now, if it does become resistance in here, perhaps we see a pullback with a higher low, and it can create an inverted head and shoulders pattern as well. Let's wait for the market to tell us what's going to happen there. The financials broke a higher high here, but again, quite extended here. So maybe it continues up towards that 50-day, pulls back, and then can recover more. The market is tricky in here. Again, we're going to continue to focus on the individual names. The energy names, as we know, have continued their bounce, and once again, they did so today. Above that rising 5-day moving average, you don't sell short.